Welcome back to GoldMining Swissie. We are officially on episode 08 covering week 26 of our recovery journey. If you've been following along, you know exactly what we're about here. But hey, if you're new, you are stepping right into a meticulous, step-by-step explainer of what real trading recovery actually looks like. There's no hype here, no overnight riches, just calm, deliberate execution. So let's just get right to it.
What you're seeing right now really sets the tone for everything we do. It's our aesthetic anchor, representing the cinematic, totally transparent nature of this real Cent Account documentary. You know, we don't hide the red days, and we definitely don't exaggerate the green ones. Everything is just laid bare, the balance, the equity, and most importantly, our ongoing mission to recover from those past drawdowns. It's all about owning the data and actually learning from it.
Before we even look at a single chart today, I want you to internalize this one thought. Recovery is rarely linear. It's built on disciplined consistency. That right there is the philosophical foundation for today's analysis. So often, we expect a bounce back to happen in, one glorious, heroic trade. But the math of the markets, it tells a completely different story. True recovery is a quiet, grinding process. It's really just about showing up, executing your plan, and protecting your capital week after week.
All right, let's move into section 1, week 26 performance review, the micro view.
Okay, let's dive into this. For week 26, the account secured a positive weekly return of 0.78%. Now, I know, in the world of flashy trading, less than 1% might not sound like a headline grabber, but context is literally everything here. This was a steady, highly controlled trading period. It wasn't a dramatic one. And honestly, when you're in a recovery phase, a quiet, positive week is exactly what you want to see.
And this breaks down exactly how we got there. Looking closely at our weekly MetaTrader 5 summary, we can see that 0.781% gain translated into hard numbers. The account earned 15.25 cents. Remember, we're talking about a cent account here, so we are dealing with micro increments to maintain a really highly controlled risk profile. The beauty of this isn't the size of the profit, it's the microscopic footprint of the risk we took to actually achieve it. Taking a look at the gross profit distribution, you can see our 15.25 cents total, but check out what's right next to it. Zero gross loss for the entire week. Absolutely zero. I mean, that perfectly showcases the disciplined execution of the strategy we've been talking about. We simply took what the market offered, locked it in, and didn't bleed a single cent back to the market in losing trades over these 5 days. Now, what's really interesting about this slide is the individual trade breakdown. Just a single 0.04 USDCHF buy order did the heavy lifting this week. It generated 14.65 in pure profit, and when you add the 0.60 swap, the overnight holding interest, you arrive precisely at our 15.25 total. One well-placed, carefully managed trade. No overtrading, no panic buying or selling, just total surgical precision. When you plot that activity over the week, you get this weekly equity curve. Notice the stabilization here. Yeah, there's a slight dip before the rise, but the overall trend is smoothly upward, finishing higher than it started. This beautifully illustrates a calm trading week entirely free of extreme volatility or dangerous drawdowns. Our risk was totally contained and our equity grew. Let's step back and look at section 2, lifetime account positioning, the macro contrast.
Here is the raw, unfiltered truth of where we stand. We are comparing our solid week 26 gain of plus 0.78% against a total lifetime growth that currently sits at negative 17.69%. We juxtapose this short-term win against the long-term reality because, well, this explainer is built on complete transparency. We aren't hiding from the past. We are actively engineering our way out of it.
Looking at our lifetime balance and equity curve, you can clearly see the massive historical gap between the balance, sitting up at 1967.75, and the floating equity down at 1347.19. See that huge cliff? That was the major drawdown event from the past. It's honestly a stark visual reminder of why risk management is quite literally the single most important skill in trading.
This maps our drawdown versus balance over the account's entire life. At its absolute worst, this account suffered a 65.44% maximum drawdown. That is a deep, deep hole. But while the floating equity still remains below the balance today, look over at the right side. The current trajectory shows a gradual, methodical climb. We stabilized the bleeding, and we're slowly inching our way back up the mountain.
So the crucial point is right here on our lifetime growth curve. We've improved our position to that negative 17.69%. It really is a reminder that recovery almost never consists of one dramatic, heroic rebound. It's about stringing together many, many small positive weeks, just like week 26. You just chip away at the deficit, cent by cent, trade by trade, until you are whole again.
Moving on to Section 3, USDCHF market drivers, the context. Take a look at this M15 USDCHF chart. As we scan through this, notice the entry points. The market presented a relatively controlled, upward trending condition. It wasn't violently whipping back and forth at all. This kind of steady, predictable rhythm perfectly suited our gradual recovery strategy. It allowed our buy order to breathe, mature, and eventually close in profit without ever triggering our safety stops.
But you know, charts don't move in a vacuum, so what was actually driving this? Our macro market drivers this week were heavily influenced by shifting Federal Reserve expectations and the resulting movements in U.S. Treasury yields. At the same time, general global risk sentiment was interacting with traditional Swiss franc safe haven flows. Basically, these overarching global forces reached an equilibrium that created the stable, slightly bullish USDCHF environment we successfully traded in this week. Finally, Section 4, the road to 100. Philosophy and next steps.
The core philosophy of this entire project is right here in front of us. Disciplined consistency and realistic expectations over chasing large, risky gains. We're on a journey to reach 10,000 cents, which equals $100 in equity. And we are committing to sharing every single profitable, boring, and difficult week honestly along the way. No shortcuts, guys, just the raw reality of the process.
Which leaves us with the ultimate question as we wrap up this explainer. Will the rigorous discipline of small, marginal gains successfully guide this account all the way to the $100 finish line? It's a slow road for sure, but as week 26 proved, it is a road moving in the right direction. Thank you so much for joining me for this week's update. Keep your discipline sharp, and I'll see you in the next explainer.